So last month I did this video where we looked at the basics of buying unlisted shares. The video performed extremely well. Thank you so much for that. And for those who haven't watched it yet, here's a quick synopsis. So very simply, unlisted shares, or what's also called pre-IPO shares, are shares of a company that are yet to be listed on the stock exchange, and prominent examples would include Swiggy, NSE, Farm Easy, Oyo, Chennai Super Kings, SBI Mutual Fund, and many more. These shares are typically held by promoters, employees, ex employees, angel investors, etc., who sell them to people like you and me before an IPO and is available in limited quantities. Trading in unlisted shares is perfectly legal in India and often involves brokers, dealers, but what's gaining prominence are online unlisted share platforms who make the process super simple. The ticket size is super low with a host of useful features like research reports, digital KYC, order tracking, and assisted liquidation. In terms of risk, there's always the chance of losing some part of your capital. Sometimes there are liquidity issues. IPOs can be delayed, as it happened in the case of Oyo, NSE, and even Swiggy. Dilution is another possibility, and there's always the fraud and manipulation angle. But having said this, many pre IPO shares hold the potential to become future multi-baggers, as the IPO process often injects significant growth capital into these companies, allowing them to expand operations, improve profitability, and ultimately enhance shareholder value. In that video, I also walked you through a detailed step-by-step guide on how to buy unlisted shares, and as expected, many of you had several follow-up questions, not just about the buying process, but on also how to manage and eventually sell these unlisted shares. And therefore, for this video, I've compiled a list of the 10 most commonly asked questions. And because I'm not the expert here, I connected with the team at Incred Money, who not only answered all our questions patiently, but were also nice enough to sponsor this video and support my content creation journey. That being said, let's begin with question number 1. So the question goes, is it possible that I buy unlisted shares at one price only to see them being offered during the IPO at a much lower price? Yes, that's very much possible. There aren't many examples of this, but it does remind me of Reliance Retail, where investors who had paid up to 3,400 rupees a share were left facing losses of up to 60% when the company decided to cancel and extinguish those shares, offering investors a compensation of just 1,362 rupees. Paytm is another example, and incredibly, a single share of Paytm was priced at 21,000 rupees in June of 2021, according to this report. And then it got IPO'd at a substantially lower number of just around 2,000 rupees. And if that's not enough, we anyways know where the price is currently. My point is, every business, every company, irrespective of whether it is listed or unlisted, will continue to face market forces like competition, regulatory changes, sector downturns, changes to the business model, governance issues, etc. And it is our job as investors to study these changes, examine the company, the industry, its competitive advantage, growth potential, the management, and of course, the company's valuations, which is not that easy to judge during the pre IPO stage. So, someone is asking me, is there any benefit of acquiring shares at the pre IPO stage rather than waiting for the IPO to come? Okay, so I'll be quick on this one, and the way I see it, there are two key advantages. The first one is, of course, some pricing advantage you might get, especially if one acquires these shares 6, 12, maybe 20 months before the IPO. While the second benefit, which in my view is the bigger benefit, is that in the case of pre-IPOs, the allotment is absolutely guaranteed, which is definitely not the case with IPOs. And aajkal to if someone gets an IPO allotment, it's a bit like lottery lag gayi hai. So essentially, pre-IPO investing helps you cut the queue, and hopefully you won't miss out on some really good companies. Okay, question number 3 is, and this is like the most commonly asked question in the comment section, which is, how can I sell the unlisted shares I bought earlier during the pre-IPO period itself? Right, so you want to sell your unlisted shares, and the reasons can be anything. Maybe you need the money, or perhaps you don't believe in the company anymore, or maybe the price has shot up, so you want to do some profit booking, etc. Of course, I'm assuming this is just a small set of shareholders, and that most of you will hold on to your shares for a much longer period. But if you want to exit sooner, let me tell you, this is very much possible. But it has the small irritation that the liquidation process will not be as smooth as how you bought those shares. But it's still simple enough. And the ideal thing to do here is to connect back with the platform you bought those unlisted shares on. Like in the case of Incred Money, kindly drop an email at connect at incredmoney.com with your name, PAN, the number of shares you hold, which company, your expected price, etc. As next steps, the team at Incred Money would reach out to you. They'll try to find a buyer for your units on a best effort basis. And once there's a match for your expected price and quantity, the team will notify you and initiate the transaction. Again, this is not a simple click and sell kind of a thing. And here are the specific steps that you, the seller of unlisted shares, has to undertake. Firstly, once the prices are agreed, Incred Money will send you a deal sheet with all relevant details. Please read this carefully. Then you'll need to transfer units from your demat account to Incred Money. Of course, the team there will explain all steps and do the hand holding. And finally, after the units are transferred, you'll receive a confirmation from Incred Money, who will then transfer the funds to your bank account. So liquidation does require some extra work, but if you really need to exit, then my suggestion is please do so with enough time on hand, because once the IPO is launched and the ISIN gets frozen by the company, you will not be able to sell your unlisted shares for the next 6 months post the IPO closure. इसका communication भी आएगा, and as an example, here's an email sent by Vari Energies Limited intimating investors that all transfers will be suspended starting from the 14th of October. So please be aware of such timelines if you're wanting to sell shares at the pre-IPO stage. But as I said earlier, sell only if you have to. Okay, let's come to question number 4. Why does the buying price of an unlisted share vary so much across different platforms? It's a very good question, and this difference in price can be due to a number of reasons. So firstly, some platforms are able to source securities from sellers at better rates, which allows them to offer shares at more competitive prices compared to others, which is also why it's important to work with only those platforms that can provide this advantage. Point 2, and a very important one, is the intermediary markup. In fact, there's a question on charges. I think it's question number 5. So I'll take this part up along with that. And thirdly, there's the type of shares. And you might have seen this on some platforms wherein one share of Swiggy, or maybe 10,000 rupees worth of Swiggy shares, was being offered at some 480, 490 rupees a share. And then a few days later, another lot of Swiggy shares showed up at a much lower price of say 380, 390 rupees. So what happened here is that this new lot was not your regular common equity shares, but this was a CCPS strand. CCPS stands for Compulsory Convertible Preference Shares, that was available in lot sizes of 1,401 shares each, which means at 390 rupees a share, this required the investor to fork up about 5.5 lakh rupees to acquire them. So because this was more of a bulk order, these kinds of shares are available at a cheaper rate, and that's again why you see different prices on different platforms. Right, so the next question is on expenses. That is, what are the charges levied by platforms when one buys unlisted shares through them? Okay, so there are typically 2 types of charges here. The first is a transaction fee, and this depends from platform to platform. And when I say platform, it's not just the online ones. I'm including brokers and all kinds of offline intermediaries as well. So someone charges 2%, someone would say 3%. I know a broker who takes 5% of the buying value, so nothing is fixed. In fact, Incred Money does not charge any transaction fee, which means there are all kinds of pricing models when it comes to the transaction fee part. The second kind of fee is a bit more subtle. It's a bit hidden. And this is the markup percentage that all these platforms keep. What do I mean by that? So for example, let's say platform X has acquired some shares at 400 rupees. Now they can definitely sell it to you at 400, but honestly, no one would do that. And let's say this platform offers it to you at 410 rupees, thereby pocketing that extra 2.5% for themselves. It works the same way while selling as well. That is, the deal might have gone through at 500 rupees a share, but the broker or the platform would instead inform you कि भाई ये deal तो 480 रुपए में ही हो पाया है, and in the process they will pocket 20 rupees per share from this. Frankly, this is nothing new. Every middleman does it, whether it's a mutual fund, real estate broker, car dealers, travel agents, and even Swiggy and Zomato का business भी इसी पे चलता है. Now, if one thinks practically, this markup is justified to some extent in the sense that it gives the platform some protection in a scenario where they might buy shares at a certain price only for the value of these shares to drop sharply before they can sell them, leading to big losses for them. Anyways, I will leave it at that, since this is not a discussion around business strategy or morality. But all said and done, please remember, discovering the right price to buy or sell unlisted shares is ultimately ours, the investor's responsibility. मुझे पता था ये question आएगा. Are there any discounts? Well, absolutely not in most cases, but because I have this habit of finding good deals for you, as you must have figured out from my newsletter, I am happy to report Incred Money is currently offering a discount of 0.25% on the first transaction that you make through them. Now, that's an incredible offer from Incred, isn't it? But guess what? Just for a limited time period and just for my channel viewers, Incred Money is offering an additional 0.25% discount, which means you can now get a 0.5% discount on your first transaction. And all you need to do for this is to use the link I have attached in this video's description.
That's it?
Yes, that's it. And now that I've given you that added incentive, let's look at why investing via Incred Money makes even more sense. So, firstly, it has the trust and backing of the Incred Group, a diversified financial services conglomerate with interest spanning across asset management, lending, alternative investments, etc. You can start on Incred Money with a minimum investment of just 10,000 rupees, and in many cases, you can buy as little as one share. The platform charges no transaction fees. You'll find useful information here, including the key financials for every company. Track your orders with absolute ease on the platform itself. For any kind of support, connect with the customer service team on these numbers or via email. And in case I haven't mentioned it before, Incred Money is offering my channel viewers a 0.5% discount on the purchase of unlisted shares, the link for which is attached in the video's description. Right, so the next question is on, well, it's a very valid question and it says, where exactly can I see the unlisted shares I bought? Okay, so let's take one step back. And while buying shares, actually, even before that, so that's two steps back. So when you are registering yourself on the platform, one of the fields you'll have to compulsorily enter is your demat account. And once you've bought unlisted shares, your demat account is exactly where these shares would go. For instance, my depository is CDSL, so I can either download the CDSL My Easy app to check my demat holdings, and if your depository is NSDL, then you can use the Speed E app, or alternatively, you can also check them in the demat holding section of your broking account. Like in my case, I bought unlisted shares of Bira 91 last month, and see here, I'm able to see it on the CDSL My Easy app and also here under holdings on Zerodha console. Notice in both cases, the price per share is some random 10 rupees or a blank, while what I actually paid was some 560 rupees. And why this discrepancy exists is because there is no way for CDSL to know at what price I bought those unlisted shares. But the shares are very much there, and as to by when, that is, in how many days will the unlisted share show up in my demat account once I've bought it, well, honestly, it's really not possible to put an exact date to it. It depends from platform to platform, even company to company. And the best practice here is for the broker or platform to inform you the number of days within which the share should be delivered to your demat account. So there's a little variability here, but one item that takes exactly 7 days to be delivered is my weekly newsletter, where I feature some well-researched investment stories, including Zaggle Prepaid's impressive growth and international ambitions, Sky Gold's continued rise fueled by lower gold prices and increasing consumer demand, the story on Raymond Lifestyle and how its recent demerger has created a potential mispricing opportunity, Seagull's growing ambitions and order book in the EPC space, and most recently, how and why Garware High-Tech Films is likely to double its EPS over the next 2 years. And forget 2 years, within a week of me releasing the newsletter, the stock has already risen by a good 10%. All this is a lot of research, a lot of reading, but it's all worth it when we see these ideas translate into real profits. If you haven't subscribed to my newsletter, then kindly do so now and also tell your friends about it. Okay, we are at question number 8, and this is a very sweet one. So, this person is asking, I have 100 shares of Swiggy. Do I have to do anything at all? Anything at all, capital mein hai. Do I have to do anything at all when the IPO process is going on or when the shares first start showing up on the stock exchange? Okay, the simple answer is no, you don't have to do anything. The shares are already in your demat account, and that is where they will stay in a very safe environment. Now, a follow-up question to this is, these shares which are currently visible in my Zerodha console, can I see them in my Zerodha Kite account as well? I'm sure you have thought of this also, and from what I've understood, once the IPO process is over, head out to your console account, click on holdings under portfolio, INE833, there we go. So here are my 18 shares of B9 beverages. I then tap on these three dots, click on view discrepancy, the add trade button, and then enter the details. I bought these shares on the 2nd of September, average price of 563 shares, 18 shares, and type will be others for me. Of course, I'm not able to do this entirely right now as the BIRA 91 IPO is yet to happen, which means the shares aren't available for trading on the stock exchange. But in case any of your unlisted shares have gotten listed, then do give this approach a try and let me know how it went in the comments box below. The ninth question, and I think we have one more after this. So this question is on how would an investor know when the unlisted shares held by him or her are tradable once again, that is, these shares can be sold if the investor chooses to. Right, so this is clearly the post lock-in phase, and what this person wants to know is when and how will they know when the lock-in is over. Okay, so firstly, don't expect any such communication from anyone. I know it sounds rude, but what I've gathered from a couple of people I've spoken to is that no such communication is sent by anyone. The company, the exchange, CDSL, your broker. I mean, no one will tell you this, which means as an investor, you'll have to figure out the dates by yourself. But honestly, this part is not that hard. And just a week or two before the 6-month lock in gets over, the stock is likely to get a lot of coverage on Twitter, news channels, etc. So it will be very hard for you to miss that out. The second part of the question is on the timeline. That is, will the lock in end after 3 months or 6 months or 1 year? And this is where the SEBI rule comes into play, which says, and I'm reading it out from a circular, the lock-in of pre-IPO securities held by persons other than the promoters shall be locked in for a period of 6 months from the date of allotment in IPO. So that's it. It's 6 months, and if you're getting confused on 1 month or 3 months, then those rules are applicable more for anchor investors but not for retail investors, so it's 6 months for UN. And the 10th and final question in our list is, how are unlisted shares taxed when I sell them? Right, so I must warn you, I'm not a tax advisor, and therefore this part here is limited to what I've read from different sources, but here's my understanding. So when you sell your pre-IPO acquired shares within 24 months of purchasing them, then STCG, short-term capital gains, will apply, and the investor is taxed per his or her income tax slab for that year. However, if the shares are held for more than 24 months, then it's considered long-term in nature, and the gains from here are taxed at 12.5% with no indexation benefits. Additionally, securities transaction tax or STT is not applicable to transactions involving unlisted shares, as these are levied only on transactions that are executed on the stock exchange. But if you were to sell these shares once they are listed on the exchange, that is after the IPO, then STT will be applicable. So this is my broad understanding of taxation, and if you have any new information on this or would like to modify some of what I've said, then please let me know in the comments box below. In fact, if your understanding on any of the 10 questions is different to mine, then please feel free to point that out, as I'm very keen on learning more about unlisted shares from others' experience and also through my interaction with establishments like Incred Money who do this for a living. I sincerely hope you found this video useful. Please do share it with others. I'm sure many of your friends are keen in knowing more about unlisted shares. Do like this video, subscribe to my newsletter, and I'll see you very soon. Until then.